and welcome to The Trade. Before we get to the charts that matter, let's check in on what traders are watching out there. Well, the US economy faces a new challenge from President Trump's trade war, with KPMG economists seeing it as a recipe for fewer jobs, slower growth and high prices. US stocks ended lower on Tuesday, with the tech-heavy Nasdaq nearing correction territory following President Trump's new tariffs on Canada, Mexico and China. Canada's Prime Minister Justin Trudeau has called the tariffs on Canadian imports a very dumb thing to do and said Ottawa was striking back immediately at its closest ally. And Reuters is reporting the Trump administration and Ukraine plan to sign a minerals deal that fell through after a disastrous Oval Office meeting on Friday, in which Ukrainian President Volodymyr Zelensky was dismissed from the building. Let's get into the technicals now, and Tony Sycamore from IG joins me. Great to see you, Tony. Okay, let's focus on the Nasdaq. What are you seeing there?
Yeah, well, it's a very interesting backdrop we have in place at the moment, Olivia. I don't think what's happening on the trade front is too much of a surprise, but the slowdown in economic growth, which we've been seeing since mid-February, has really created jitters against that backdrop of tariffs. And what you've seen there was the Nasdaq was able to push to a fresh record high in mid-February. However, it was on waning momentum, and it sort of then promptly returned back into the range which you've been trading in for the past 8 weeks, really from the December highs. And when you see a market break out and then slip back into the range, it's generally not a good sign, and it warns that we're going to test the bottom of that range. Now, we've gone back towards the bottom of the range, and what you can see now is the Nasdaq is right on some very important support levels. You've got the 200-day moving average, which is the orange line. You've got the uptrend support coming from December 2022, also providing support not far below here. So my view is if you did sort of look for the pullback to extend after that false break higher, you're probably moving to a more neutral bias here, because right here, as we mentioned, it's on massive, massive support. If it does see a sustained break below here, then I think you're probably looking for a move down towards 18,800. But right here, right now, you've got to allow these very important support levels to hold and potentially for a bounce to develop.
Okay, let's check our local market now. What are we seeing on the ASX 200?
Very similar in terms of the ASX 200 push to a fresh record high in mid-February up to 86.15. You can see the loss of momentum candle up there. You can see the divergence on the RSI, and then it sliced through the support coming in around 83.50. And the next downside target which followed was this uptrend support and the 200-day moving average. So a lot of these equity markets are lining up. In terms of the pullback for the ASX 200 this morning, we're looking at around 6%. For the Nasdaq, it's closer to 10%, but the Nasdaq is high beta, as we know. But the markets are moving pretty much all in tandem here other than that. And you've got this 200-day providing very strong support here. I am looking for it to hold. I think you've got to give it the benefit of the doubt. It has held on a number of previous prior occasions. But if it does break below, let's say that 200-day moving average, and then below that 80.50 low, which we saw back in December, you'd probably start to think that we're moving down towards 7,600. But right here, right now, we've had a pullback of about a standard magnitude. It is possible we have a 10% pullback. We can't rule that out. But while it's right here on support, it's not my base case.
Okay, let's check currencies. How is the local Aussie dollar faring?
The Aussie dollar had a remarkable turnaround. It was under a lot of pressure yesterday when those tariffs came into effect, and then when the retaliatory tariffs were announced. But it's really springboarded higher, and I think there's probably an element now where we suspect that the Aussie dollar does have some good news coming out in the form of GDP shortly. So that's probably paid a nice part of that bounce. In terms of the technical picture here, I think there's potentially a situation where the Aussies still missing a leg higher to complete a correction for me in an Elliott wave sense. That could possibly take us up towards 65 cents, and the Aussie can still be in a downtrend. So at this point in time, I'm still bearish, but I don't discount the idea that we may see higher levels before we see another leg lower.
And Bitcoin it's had a bit of a rocky time. So how are you reading it?
A very interesting start to the week, and certainly some gyrations. But after the gyrations, it settled back where it was pre-Trump's announcement about the strategic crypto reserve. And I think that's about right in terms of where we should be, because that was obviously a news without any sort of backing in terms of how it's going to be funded. If it is coming from the transfer of illicit crypto coins held by the US government already, there's no net buying because it's just a straight transfer, if you like. So we don't have enough details to really get too excited about that Bitcoin run up. And right here, right now, I think you've got to allow the correction from this 109,000 high to continue to play out. It's found support at 200-day moving average, that 200-day moving average coming into play again on our charts. But there's no real reason for me to break above that downtrend resistance at this point of time. So while we remain below downtrend resistance, allow the sideways corrective price action to play out. It has been a phenomenal run higher for Bitcoin. It was overdue a pullback. But now you've got to wait a little bit longer, I think. And if it were to get above 100,000, then probably that's an initial sign that the correction is complete and that the uptrend has resumed.
And we've seen oil prices fall overnight. So what are the charts showing?
It's just been the storm against crude oil, for want of a better word, has just been intense and intensifying this week. And last night we saw potentially a sell the rumour, buy the fact type reaction, because it did spike down into very, very good support and then rebounded. So I think a lot of the bad news is priced in, and we're now coming towards some very big levels in terms of support on the weekly. So signs of exhaustion down there. It has fallen by about 17% since mid-January. We know a lot of the bad news in terms of tariffs, but potentially now there's some upside coming in through this European move there to this 500 billion European infrastructure fund, which appears to be, looks likely to come through at some point of time. So that will support growth in Europe. The Chinese PMIs have been a little bit better, although we do have a new tariff on top of that. So right here, right now, I wouldn't be getting bearish crude oil. A lot of bad news is priced in for a good reason. But I think while we hold this mid-65 area, there's possibly a bounce back up towards $72 looming.
Great to get your insights, Tony. Tony Sycamore from IG. That does it for this episode of The Trade. Be sure to join us next time.